Are you doing everything you're supposed to do with your money? You budget, you squirrel money away each month, you get a little thrill watching your savings account balance creep up, and yet those big goals, buying a home, a comfortable retirement, real financial freedom, still feel impossibly far away. What if I told you that the most common piece of financial advice, save your money, is actually what's keeping you from ever getting truly wealthy? What if the safe option is secretly costing you a fortune? In this video, I'm going to show you why just saving your money is a broken model for building wealth, and I'll give you the exact playbook to shift from being a passive saver to an active wealth builder. This is how you start making real, meaningful progress toward the life you actually want. Look, I get it. Saving money feels productive. You're being disciplined, and that's awesome. But here's the uncomfortable truth. The money sitting in your savings account is losing value every single day. That's not an opinion. It's a mathematical certainty because of a silent wealth killer called inflation. Inflation is just a slow, steady increase in the price of everything. It's why a cup of coffee costs way more than it did a decade ago. While prices for everything else are going up, the interest you earn on a standard savings account is often pathetically low. Now you might be thinking, but what about my high-yield savings account? The rates are much better now. And you're right, some high-yield accounts today can offer rates of 4 to 5% that might keep pace with or even beat inflation. That's great, but keeping pace isn't the goal. Building wealth is. A savings account is playing defense with your money. Investing is how you go on offense. Let's look at the real numbers. If inflation is running at 3% and your savings account is only paying you 1%, you haven't made 1%, you've lost 2% of your purchasing power. Your account balance looks bigger, but your money buys less. To put it another way, one expert calculated a scenario where having $100,000 in an account earning just 0.5%, while inflation was at 4.5%, would cause you to lose nearly $18,000 in purchasing power over just 5 years. That's the invisible tax for playing it too safe. Besides inflation, a savings-only strategy has another huge problem. It has a hard ceiling. Your ability to save is limited by your income. You can only skip so many lattes or cancel so many streaming services before there's nothing left to cut. Trying to build serious wealth by only saving is like trying to fill a swimming pool with a thimble. You're working hard, but your efforts are constantly being dwarfed by bigger forces. So if saving isn't the answer, what is? It's all about a fundamental mindset shift. You need to stop thinking like a saver and start thinking like a wealth builder. Here's the difference. Saving is about putting money aside for short-term needs and emergencies. It's a defensive game. Building wealth is about actively growing your money for the long term. It's an offensive game. A saver sees money as something to be guarded and protected. A wealth builder sees money as a tool, an employee that should be working 24/7 to make more money. This shift in thinking is everything. When you become an active wealth builder, your money stops being just extra cash and becomes the engine for your financial freedom. Lasting wealth isn't built by stashing cash under the mattress or even in a savings account. It's built through consistent, disciplined decisions over a long period. And the most important decision is to put your money to work. The main way you put your money to work is through investing. It's what separates people who slowly accumulate a little bit of money from those who build life-changing wealth. Investing gives you access to 3 powerful forces that saving just can't touch. First, and most famous, is asterisk compound interest. It's been called the 8th wonder of the world, and for good reason. Compounding is when you earn returns not just on your initial investment, but also on the returns you've already made. It's like a snowball rolling downhill. It starts small, but it picks up more snow, getting bigger and faster at an ever-increasing rate. Your money starts earning money, and then the money your money earns starts earning even more money. It's this exponential growth that creates fortunes over time. The second force is asterisk capital appreciation. This simply means the things you invest in, like stocks or real estate, go up in value over time. While cash in the bank just sits there, a piece of a great company can become way more valuable over the years. And third is asterisk passive income. Some investments, like dividend stocks or rental properties, can generate a steady stream of cash flow without you having to actively work for it. This income can then be reinvested, throwing more fuel on your wealth building fire. The difference this makes is staggering. Let's say you invest just $500 a month. Now, assuming you get a return of around 10%, which is close to the S&P 500's historical average, but is absolutely not guaranteed in 30 years, you could have over $1 million. If you would just save that same $500 a month in a traditional savings account with minimal interest, you'd have only the $180,000 you put in. That's the life-altering power of investing. I know. The idea of investing can feel intimidating. The jargon, the risk, the scary charts, it can seem like a lot. But if the shift from saving to investing is starting to click for you, do me a favor and hit that subscribe button. button. We're going to break it all down, step by step, and I promise it's way more accessible than you think. Becoming an investor doesn't mean you need to be a stock-picking wizard or have a ton of cash to start. In fact, the simplest strategies are often the most effective. The key is to start now and be consistent. Here's how you can begin. First, if your employer offers a *401k with a matching contribution that is the single best place to start. An employer match is literally free money. If they match 100% of your contributions up to say 5% of your salary, you're getting an instant 100% return on your money. No other investment in the world can guarantee that. Getting your full employer match should be your absolute top priority. Second, automate everything. The formula for building wealth is simple. Regular investments plus time. The easiest way to be consistent is to make it automatic. Set up automatic transfers from your paycheck into your investment accounts every month. This strategy is called dollar cost averaging, and it takes all the emotion out of investing. You invest the same amount whether the market is up or down, which helps smooth out your returns and reduces stress. Set it and forget it. Third, you don't have to pick individual stocks. For most people, the best bet is to use low-cost index funds or ETFs. These funds are like a basket holding hundreds or even thousands of different stocks, giving you instant diversification. For example, an S&P 500 index fund gives you a tiny piece of the 500 largest companies in the US. This diversification is key because it spreads out your risk. So if one company does poorly, it won't sink your whole portfolio. Once you got your automated investing plan humming along, you can explore other assets to pour more gas on the fire. One of the most time-tested wealth builders is real estate. Now, you don't need to be a real estate mogul overnight. A popular strategy for beginners is house hacking. That's where you buy a small multi-unit property, like a duplex, live in one unit, and rent out the others. The rent from your tenants can help pay your mortgage, possibly letting you live for cheap or even free while you build equity in a valuable asset. If being a landlord sounds like a headache, there's an easier way. Real estate investment trusts, or REITs. A REIT is a company that owns and operates income-producing properties. Think apartment buildings, warehouses, or shopping centers, and you can buy shares of it just like a stock. It's like being a landlord without the late-night calls about a leaky toilet. Let me be crystal clear, this is not about never saving money. That would be reckless. Saving and investing aren't enemies, they're partners, and a smart financial plan needs both. Your savings account is for your short-term stability. This is where you keep your emergency fund, 3 to 6 months of essential living expenses. This money needs to be safe and easy to get to for life's inevitable curveballs. It's also where you save for big purchases happening in the next couple of years. Your investment accounts are for your long-term growth. This is the money for your 10, 20, or 30-year goals, like retirement and true financial independence. This is the money you put to work, letting it compound and grow into something substantial. The best strategy is a balanced one. Save for security, invest for wealth. For too long, we've been told to just save our money, playing a financial game that wasn't designed to make us wealthy. The path to financial freedom isn't paved with savings alone. It's built with the powerful engine of investing. It all starts with that mindset shift. You are not just a saver, you are a wealth builder. It continues when you understand that your money has to work for you, and it becomes real when you take simple, automated actions. Get your 401k match, automate your investing into low-cost funds, and give your money the one thing it needs most: time. The best time to start investing was yesterday. The second best time is right now. You don't need a crazy shortcut. You just need a strategy and the discipline to see it through. Take these steps, and you'll stop just saving money and start building real, lasting wealth. If you're ready to put this into action and want to know exactly which index funds are great for beginners, check out this next video right here. Thanks for watching, and let's go build your future.